Welcome to Clarity, a podcast powered by the Thomson Reuters Institute. I'm Zach Warren, the Institute's Technology and Innovation Insights lead. In each episode, we dive deep into a single question from decision makers and thought leaders from legal, corporate, tax accounting and audit, and government communities. In today's episode, we discuss the big question: what does the One Big Beautiful Bill Act mean for tax reform? The passage of the One Big Beautiful Bill Act on July 3rd will bring with it a host of changes for the U.S. as a whole. And that certainly includes the tax world, where a number of provisions within the act will bring with it new changes and added complexities for tax professionals to master. But it's one thing to read through the act. It's another to determine what the act's passage will mean for tax professionals themselves. Today, TRI's Nadya Britton speaks with Shaun Hunley, senior editor of Checkpoint at Thomson Reuters, to bring some clarity on just that, letting tax professionals find out what this new act means not only for the tax code, but for their own businesses and clients.
Thanks, Zach. Again, I'm Nadya Britton, content lead, covering tax, accounting, audit, and trade at the Thomson Reuters Institute. And I am excited to be joined by Shaun Hunley. Shaun, welcome back.
Thank you
It's
so
great
much.
to connect with you. Yeah, I'm
Thanks
so
so much,
excited.
Nadia. Yeah, it's a busy summer.
So it seems, but before we get into all the things, I'm going to just ask you to briefly reintroduce yourself to our audience.
Oh, absolutely. Well, hello, everybody. My name is Shaun Hunley. I'm an executive editor with Thomson Reuters. So if you've ever heard of Thomson Reuters Checkpoint, which is a great research platform for tax professionals, I do edit a lot of the materials there on Checkpoint. I write a lot about current events, news, tax legislation, which we're going to talk about today, and tax policy. So have been with Thomson Reuters for almost 10 years, which I can't believe. It's been a long time. But before that, I did practice in the accounting and tax space, mostly with the big four firms. So had a lot of great experience there. So I'm really looking forward to this discussion, Nadia. I think it's going to be very enlightening, and hopefully I won't scare anybody. That's my goal. That's my goal today.
Well, a little bit of fair sometimes is good, right? Because it
It can
keeps us on our toes and
it
it
can
helps
be
us refocus.
motivating. It
There
can
you
motivate
go.
you to action. So we'll see what happens.
All righty, great. So the last time you and I spoke
hmm
on this podcast was around November 6th, I believe, of last year.
Yes,
Wow.
I know,
And
right? Yeah.
well, more important, as I was preparing for today, I thought about I had asked you to get out of your crystal ball
Yes.
and make some predictions, which bless you, you were bold enough to do it. Do
Yes.
you recall?
I do recall, and I feel like I got a few things right and a few things wrong, which is kind of typical. The thing I got wrong, Nadia, I think I told people that possibly the corporate tax rate would be lowered even more than it is now, and I was wrong. So I
If there's something
apologize.
to be wrong on, I mean, first of all, again, pretty bold, but impressive at the same time. And I think that there's so much, and which we'll get into with the One Big Beautiful Bill Act,
Yes.
that many people couldn't see it coming, or the magnitude of it, right, or how comprehensive. So
Right,
what I'd
right.
like what I'd like to start with, though, just set the stage. If you can give our audience an overview or highlights, it's over 800 pages, so
Yes, yeah.
however you can kind of pull out some key points for our audience. That's
Abs- Absolutely. And I'm going to focus just on the tax portions of
great.
the bill. We know there's a lot of other things in the bill related to cuts, spending cuts, things like that. I'm not going to go too much into that. I will focus on the tax provisions, and I will say that the bill does three major things. The first thing it does is it makes a lot of the TCJA provisions that we have been used to for so many years, makes them permanent. So, for example, we had the large standard deduction from the TCJA. That is permanent now. So that's something that I think a lot of people got used to and they liked because they didn't have to bother with itemized deductions. So that's permanent. The tax rates, which were lowered by the TCJA, are also permanent. So I think that was kind of the major goal of Congress when they looked at the Big Beautiful Bill Act is they wanted to make a lot of those key provisions from the TCJA permanent, and they did so. So that's number one. The second thing that the bill did, it modified some of the TCJA provisions. So not only did they extend them, but they also modified some of them. And the biggest example there is your state and local tax deduction cap. That was always a controversial provision from the start. And you guys probably remember it was a $10,000 cap, and that's thanks to the TCJA. Huge kind of negotiating point for Congress. I think it was one of the most important provisions of this bill. It kept the cap, but it modified it and actually modified it to a larger cap of $40,000. And it's going to increase by 1% over the years through 2029. Okay. So it is still temporary, but it is larger, and it's going to help a lot of people who do itemize their deductions. Starting in 2030, it's going to go back to $10,000. So that's kind of the framework there. So modifications, and then I think what most people are talking about, category number 3, are the new provisions of the bill. So the new provisions are mainly some of the campaign promises of President Trump. So the first one was no tax on tips. The second one was no tax on Social Security income. The third one was no tax on overtime. And then the other one was the auto loan interest deduction, and that also made it into the bill. So that's kind of your third category. I want to talk about some of those later because I think there are some misconceptions about those new provisions, and I want tax practitioners to be aware of that and how they can communicate that to clients. So we'll talk about that later, but that is category 3. These are our new provisions that I think some of us saw them coming, but we didn't know if they would make it into the bill, and they did. So those are your 3 kind of major goals of the Big Beautiful Bill Act.
Great. And not sure if you covered off on it, but timelines for some of those provisions, right? Because I'm sure that every tax professional is more than keen to understand it. And then later we'll kind of get into what this preparing for it or getting clients ready for that looks like.
Right. So I think the timeline is perhaps the most confusing or complex part of the bill. And I think practitioners really need to pay attention to the various dates within the bill. I would say overall, the provisions of the bill will apply starting in 2026. So they will start next year. And that's because the TCJA, most of those provisions were expiring at the end of this year, right? So I would say, generally speaking, you're looking at 2026, which those are the returns you will file in 2027, right? However, there are some really significant provisions that will affect the 2025 returns. So right now, as we speak, and so some of the more the provisions that affect small businesses, I would say, are the ones practitioners need to look at. And the big ones there was an increase to the Section 179 deduction. That's the deduction for acquisition of property. That does go into effect this year, so starting January 1st, 2025. Bonus depreciation, that was another huge provision, 100% bonus depreciation provision. That applies to property placed in service after January 19th, 2025. So it's a little different there. So there are provisions that will affect this year, and I won't go into all of them, but you just have to pay attention to the different effective dates in the bill. So 2026 mostly, a little 2025 as well.
What challenges, if any, um, does this present for tax professionals?
Yeah, the effective dates are always a challenge because I think a lot of us kind of just assume everything's in 2026
Right.
and we don't need to really think about the bill right now. And I understand that because we definitely get busy as tax professionals. We're heading into the fall season where we're looking at extended returns for 2024, right? We're not done with 2024 yet. So we tend to just kind of blank all of that stuff out of our minds and say, I'll just deal with it next year. We can't really do that per se with some of these 2025 provisions. Specifically, the ones I mentioned were for bonus depreciation, Section 179, because clients out there, they're going to be acquiring property this year, right? They're going to be doing these acquisitions. And so people need to be aware of these different kind of effective dates. So I think that's a challenge, is to kind of keep all of those straight. Um, the other thing that I mentioned a little earlier, I think is another really significant challenge, is to clear up misconceptions that your clients will have. Okay. The new provisions I talked about have been widely publicized in the news. Okay. So these are no tax on tips, no tax on Social Security, no tax on overtime, also the auto loan deduction. I think what people need to realize, and I'm talking to tax professionals here, your clients need to realize that some of the ways that these provisions have been presented in the media are perhaps misleading to clients. I'm going to take no tax on Social Security first. When you read the bill, does it say that Social Security income is exempt from tax? It actually doesn't even say that, right? And I think some of your older clients feel like that's going to be the case. And so they're preparing, hey, next year I'm not going to have any tax on that Social Security income. Unfortunately, that's not how the bill was written. So the bill was written to give those individuals age 65 and older an additional deduction. Okay. And the additional deduction is generally $6,000 per qualified individual, which is somebody age 65 or older. And that's in addition to the standard deduction that they receive on their tax return. So that is, in my opinion, that's not really an exemption per se of your Social Security income. It's merely an increased deduction. So what do tax professionals need to do? They need to proactively go out to their clients this year. I don't want you to wait till next year, because the bill is fresh on everybody's minds. And I want them to proactively communicate, hey, this is exactly what it is. You may have heard it's this, but it is in fact this. And that'll help your client relationships next year, because they're not going to get angry with you, right? Because you gave them
Right.
a heads up. Um, what I saw years ago when TCJA was enacted, a lot of clients were not aware of the new provisions. And for some of them, they actually had an increase in their taxes. Not everybody, but some of them. And of course, the first thing they do is blame their tax
Of
professional,
course.
right? Right? I'm sure people are nodding their heads. Yes. But if you proactively reach out now and say, here are some misconceptions I'm going to clear up for you, hopefully that'll improve the relationship and kind of avoid some problems next year when you're doing some compliance. So that's the first thing I want to point out, misconception wise. The other one is the no tax on tips.
Mm.
Similar in that it's not really an exemption from income. The tips will still be taxed. However, there is a deduction that is available in that situation, and it's up to $25,000 per year. Okay, so it is another kind of exemption that is written into the code as a deduction, I would say, but it's not a complete exemption, right? That's another thing. So if you have a lot of clients in the service industry, you need to let them know that it's actually a deduction and there's actually a phase out as well. So if you earn a lot more money, you're not going to be able to get this full deduction, right? So that's another kind of
That's
complex thing.
important.
It's very important. The auto loan interest deduction, which is brand new, um, I think people are kind of seeing that it may not be as effective as maybe we thought it would be initially, because it also has a pretty strict phase out amount. So if you're single and you earn more than $100,000, that deduction is going to start phasing out. The maximum deduction is $10,000, and that's of the loan interest amount. The more you earn, the less you're going to get, and eventually it'll just phase out completely. So it may not be as effective for some taxpayers.
And clarity on the auto loan, because I thought I saw something that mentioned that the cars had to be assembled in the US.
There are some manufacturer type requirements, and weight requirements on the car as well.
Mm,
So this provision is a little more complicated than I think we kind of thought it would be. But yes, there are going to be some strict kind of manufacturer type guidelines. So that's another thing you need to be aware of. So clear up the misconceptions now and prepare them later during tax time when they think, oh, wait a minute, I thought I was getting an exemption on this income,
right.
but I'm not. And it's because really it's a deduction. So I want to clear that up. The other thing I want to mention is the energy credits. And
Glad you mentioned.
I think I did in my crystal ball last year. I think I mentioned the energy credits were going to go away. So I think I
You
got that part
absolutely did.
right.
You absolutely did. Yes,
That
I was
part
going
I
to bring
got
that up.
right.
Yes,
That part I
yes.
got right. So a lot of them, these energy credits, are going away a little faster than what we had in prior law. In prior
Right.
law, that was the Inflation Reduction Act, all of those, that legislation there. What we're seeing is some of these are going to be going away this year in 2025. Okay.
Can we stop there for a minute? Because I
Yeah.
think, again, for those who have clients, right, that might have taken advantage of energy credits in preparation for how, and honestly, this is what led to the question of the challenges they will face. I think this is one for sure, right? How do you navigate and negotiate?
Right. And so I think for a lot of them, it's all about timing. So I think some of them, they liked the idea of the credit, but they were putting it off. And so they were waiting
Mm,
until maybe a future year. Um, the planning here is you got to do it now, like do it right
right.
now if you want to take advantage of these credits. The clean vehicle credit, of course, was kind of the more controversial credit. That's going
Mhm.
to start phasing out September 30th of this year. So that's a major deal breaker for some people if they want to buy an electric vehicle, right? And they
Right.
love the idea of the incentive or the credit, they need to do it right now, right? And not put it off till the end of the year. The other one is your energy efficient home improvement credits. They're going to go away at the end of this year. So if you have clients out there who are interested in that kind of stuff and they want to improve their home that way, you need to tell them now. You need to do it now, right? It's all about timing with these credits. Otherwise, you'll lose them. You won't have them at all. So that's another thing I want to point out is you might have clients out there interested in these credits and they need to take advantage of them right now as we speak.
Great. I'm
Yeah.
glad you touched on that because that's
Yeah.
one that I that was highlighted in my brain to be like, okay, this one's got a lot more immediacy to it.
It does. Yeah.
Awesome. Okay. So where we go next? So we've talked about the challenges, which again is get out in front of this, advise clients if they're not already probably calling you, right?
Right. Yep.
But on the flip side, right? We've talked about this. With every challenge, potentially comes opportunities.
Yes, absolutely.
What could that look like?
There's a lot of opportunities out there. There's some things I haven't mentioned yet that are really planning opportunities that are going to come out of this
Mm,
bill. One of them is qualified small business stock. I want to mention that just out there because this is a provision that's we've had for years and years and years, and it kind of snuck into the bill. And it
mhm,
surprised a lot of us. And it's actually a really good thing. It actually enhances the benefit you can get when you buy qualified small business stock. For those not familiar with it, it's basically an exclusion from income when you sell the stock later. So it essentially eliminates double taxation when you have a C corporation. And like I said, we've had this provision for many, many years, but it was limited. And I'm going to get my cheat sheet out just because I want to
Please
make sure I got the
do.
numbers right.
Please do.
It used to be I want to say $10 million exclusion. Yeah, it was a $10 million
Mm.
exclusion on the sale of the stock. It went up to 15 million now.
Oh, wow.
So it's a that's a fairly good increase, I would say. And
Yeah.
the deal there is you kind of have to hold it for 5 years. You get 100% exclusion when you sell the stock. Again, we've had this provision, so I think people have known about it. It's just now the increase, I think, makes it even more beneficial. And I feel like getting that news out there now is more of an advisory and a planning opportunity than a compliance opportunity. So that's
Mm.
another thing I wanted to highlight is some of these provisions that kind of were sneaky, right? They do
Yeah.
provide a lot of planning opportunities. The other one is a qualified opportunity zone, which was something that was created by the Tax Cuts and Jobs Act, but it was scheduled to go away. This bill extends it. So if you want to go into that area, and it's basically also an exclusion of capital gain type of provision, where if you sell a capital asset, you can put that gain into a qualified opportunity fund, which owns property in a qualified opportunity zone, which is kind
Mm.
of like an underdeveloped area,
Right.
right? Or an underserved area, and it kind of tries to improve that area, right? So that's another opportunity. Some people didn't take advantage of those years ago because they didn't understand them, but now that they've been around for a while and they're extended, let's go, right? Let's take advantage of that opportunity. So yes, the planning opportunities, there's going to be quite a few of them. Estate planning is also something
Right.
that is a big deal right now. The bill increased the estate tax exclusion to, I believe, $15 million. Yeah, with inflation adjustments. So that's quite
Mm.
high. I think now it's around almost 12 million. So it's gone up quite a bit. And that means less people will be subject to estate tax, but it also means those with the higher assets, higher income, they will also need to look at some estate planning. And
Mm.
that's also an opportunity, always an opportunity for your high net worth individuals. So it's not all bad news, really. I mean, I know some people, I've talked to a lot of practitioners who say, I just don't want to learn new law anymore. I'm tired of
Right.
it, which I don't blame them because we've had new law pretty continuously since I want to say end of 2017, right? So
That's correct.
TCJA, we had all the COVID legislation, we had the Inflation Reduction Act. It is a lot. And now they're saying, I don't want to learn all these new things. Well, I get that, but there are some opportunities. Um, not just planning opportunities, but opportunities to improve client relationships through your proactive
Mm.
communication about the bill. Because again, it's in the news so much. Get out in front of them and give them exactly what they need to know. So that's my advice is look at it as a planning opportunity and a client relationship opportunity.
Great.
Yeah,
Um, Again, this bill is quite
it
comprehensive.
is. Yeah.
What did we talk about that?
Ooh,
Yeah,
let me look at my
please
cheat
do.
sheet.
Yes.
Something by the way, a lot of people, I think when we talked in November, I said the child tax credit would also
Oh,
be
yes.
a
Mhm.
hot issue. And it was at first, and then it kind of fizzled out a little bit, but it did make it into the bill. Right now, the child tax credit is at 2,000 per child. It did go up a little bit to 2,200 per child. And then I believe there's going to be inflation adjustments going forward, which is a very good thing because it wasn't
Right.
previously adjusted for inflation. So not what I expected. I thought it would go up to about either $3,000 or $5,000. I was wrong, but we got a little increase, so that's good. The other
Mhm.
one that kind of surprised me that I don't think it's getting a lot of media attention is a charitable deduction for non-itemizers. So
Mm.
if you do not itemize your deductions, you just take the standard deduction, you're now able to take a charitable deduction as well. We did have this provision, I want to say in 2021, It was part of the COVID legislation. Um, this actually made it permanent after
Mhm.
2025. So this will start next year in 2026. If you're a single taxpayer, you can deduct up to $1,000 of charitable contributions, and if you're married filing jointly, it's $2,000. So I kind of like that. I think that's a really nice provision because back in the day, if you didn't itemize, there was no incentive to donate to
That's
charity
exactly right.
from a tax
Yeah.
perspective. So
Yeah,
that
exactly.
made it into the bill. So that's also a planning opportunity for your clients out there who are charitably inclined. Maybe that's something they're
Right.
interested in doing. So I wanted to point out that. Last, I guess, unless you want to talk about some more, but I want to say
Mhm.
one provision that people are still trying to figure out is called the Trump account, and that's for children. It's like a
Oh, that's right.
savings.
Yes.
It's like a
Hmm.
savings account for children. You have to be born between 2025 and 2028, right?
Oh,
So
okay.
it's a limited kind of application. You get a one-time $1,000 credit to an account. And it's basic. Think of it kind of like a 529 plan,
Right.
not necessarily for just college education.
That
I
much.
think they can use it for anything like buying a home when they're, old enough or stuff like that. But that's a new provision as well. It's called a Trump account. So you may have clients out there interested. You may have some that are not interested. So that's another thing you kind of need to dive into with your clients. Um, the other thing I want to point out, and this goes back to our discussion about challenges.
Hmm.
Um, with the new provisions that we've talked about, no tax on tips and Social Security and all those things, tax practitioners, you're going to need to update your tax organizers. Now, if you get them from a service like your tax preparation software, I'm sure they will be updated. But sometimes they're not good enough. I would say you need to have
Mm.
more detailed questions and learn more about your clients. So these new provisions will kind of force you to dive deeper into your client situation. So make sure you have the proper questions on your organizer or however you get your information from your clients. That's something to think about going forward.
That was actually going to be kind of, as we're thinking about wrapping up, one of the last places I wanted to go, right? It's
Yeah,
keeping
yeah,
up with, right? Advice is you've got to keep up and understand because as you
yep.
mentioned, right, in the news we're given this, but as a tax professional you will be required to know in detail how these things affect your clients. So for me, and it's just more of a comment but it's also a question,
Hmm.
right, there has to be a technology component here, right?
Yes.
It's not how, because how in the world do you do all of these things?
Yes, there's definitely a technology component. So the first kind of area is your tax preparation software. You have to make sure it's been up to date with all of the new provisions. I don't think
Mm.
they need to worry too much about that. I think tax software companies are pretty good at staying up to date with the new provisions. But, just make sure, you got to double check to make sure the software is doing it correctly. But so that's the first component is your tax preparation software. Your second component is your research, right? It's understanding the new provisions and how do you do that? And, I'm kind of biased in a way because I do edit for Checkpoint, but Checkpoint always has great resources when it comes to summarizing a tax bill, for example. They'll have all the major provisions, all the effective dates, right? So you can keep all those things straight. The other thing is the use of AI. AI is going to be such a huge helper in a way when it comes to tax professionals. For example, you can go on to a generative AI service. You can upload that bill, all 800 and plus pages
I
of
did
it,
that.
right?
That's what I did, yes.
And you can start asking it questions. Now, I always tell people just make sure, double check with the provision because sometimes it may be reading it in a different way and it may not completely understand the provision. Um, but I will say I played around with that as well. And for example, I asked it the question, is Social Security income exempt under this bill? And
Mm,
AI said no, right? But it was smart, like I would expect it to be, and it said, but there's a deduction. And I'm like, okay. So
right.
use of AI is going to be a huge help for all of you out there, all of you tax professionals. Um, just make sure you cross-reference it with the bill. Make sure it's correct. right? You always need to do that. Read the statutory language. I know a lot of us don't want to do that, especially if you're not a lawyer. You're sick of statutory language, but I do recommend you do that just to double check and make sure you've got the law down. So that's the other component, like not just the tax software, but also your research methods and how you you understand and contemplate this bill. And then the third component is definitely how are you communicating it to your clients? That's a technology issue as well. Some people I think the old-fashioned client letter maybe is not relevant anymore. Sending out emails is probably what a lot of people do. Putting blog posts on your website, your accounting firm website. But I've seen a lot of practitioners out there creating videos, and it's just a good way to get it out to a lot of people at once. And so how are you going to communicate and give your clients what they need to know? So that's another component. So those are the three components. Keep those in mind. Anytime a new bill comes out, you got to make sure those are all squared away.
Absolutely.
Yeah.
And the piece that I will layer on is, maybe the data analytics piece, right? Where you can probably use that to customize for your specific client based on, what their situation is.
100%. That is actually, I'm so glad you brought that up, because even things like the Social Security income provision, you could do some quick data mining. Give me clients that are 65 or older, right? Give me a
Right.
client list. I got that client list, and now I can kind of clear up the misconception that way. I'm using data analytics to give me that. Data analytics is great with small businesses, those who are all about asset acquisitions. Get that as well, so they can figure out the 100% bonus depreciation, the Section 179, going into in this year, 2025. So I'm so glad you brought that up, because that's a very useful tool as well. So
Awesome. Final thoughts.
Final thoughts. Okay, don't be scared. So did I scare you guys? I hope not. Though, like we said, fear can be motivating for sure. And I will give you some a positive kind of note here is it's not as bad as TCJA, right? Because TCJA was pretty much all brand new provisions. At least with this one, there are provisions you already know and you've already worked with for years, like the qualified business income deduction, for example. It's still here, right? So I don't think it'll be as bad, because you will be learning less new provisions. There's a couple that we talked about, but you're going to know these concepts already. You're just extending them and modifying them in some way. So it's not as bad. So don't get too discouraged, because I think it'll be okay.
Awesome. Well,
Yeah.
I love ending on a positive note.
Yes, as we should.
As always, Shaun, thank you so much for your time and your expertise, and the fact that you bring this information to our listeners in a clear, concise way and help them to think through how they approach their business, right? Which is most important. So
I appreciate that.
much.
I appreciate that. Thank you so much.
Thank you, Shaun and Nadya, for your insights. The new act may bring complexities, but as Shaun noted, they can be overcome. With a strong emphasis on proper technology usage, fine-tuned research understanding, and communication in as many channels as possible, tax professionals can help both their own business and their clients navigate the new paradigm. In tax, the One Big Beautiful Bill Act does not need to be one big headache. Thank you as always for joining us for Clarity, powered by the Thomson Reuters Institute. You can follow or subscribe to this podcast on your favorite podcast platform, and don't forget to share with your colleagues and leave a 5-star review. For more data-driven analysis of today's professional services market and in-depth conversations with industry thought leaders, please visit us online at thomsonreuters.com/institute and follow us on LinkedIn under the Thomson Reuters Institute. Clarity is a production of Thomson Reuters, copyright Thomson Reuters 2025.